Now, back to today's event. And obviously today's speaker, our main event, is the Managing Director of Mayur Resources, Mr. Paul Mulder. I'm sure you know Paul already. If not, and you know Mayur already. If not, Mayur is an ASX listed company. Code is M for Mary RL. Focused on nation building in PNG. And as you know, Paul, he's going to give an update on the quarterly activities report and the latest developments for the company in the September quarter and looking ahead to next year. Now, without further ado, I'd like to hand over to Paul. Paul, would you like to activate your microphone and camera, please? And we'll get you on board. Okay, morning, Paul. And yep, please kick off. Thanks, Paul.
Hello, everyone. Thanks very much for joining. Okay, so we'll try and get through the general updates as fast as possible, and then we'll look at going into questions. Very busy quarter for us, having appointed a new chairman and new non-executive director, Charles Fear and Chris Indemore. That has, I guess, from our perspective, we have a very engaged board. We've just from your perspectives, we're extremely engaged on the basis that we meet weekly. Obviously, they're coming up to speed with the company, but want to contribute as much as possible. I have had the privilege of working with Chris Indemore in the past, when both he and I worked for Gina Reinhardt, and you know, a very, very smart corporate person. Charles Fear, one of the co-founders of Argonaut, has a long career in this space also. So the value that's already come from our strategic review and focus has been extremely important. So I think one of the key things for the listeners is that our senior management team were in Papua New Guinea for an extended period, circa 1.5 to 2 months, depending on the individual. I basically had the whole team there, including myself, where we were able to get a lot of traction with a number of announcements while I was over there, and also some significant news flow that will be forthcoming very shortly. In relation to that visit, I guess a couple of things, and I want to clear this up very quickly. Some people query or question, you know, you've got this special economic zone, you're looking at renewables now, you're looking at carbon offsets. Let me be very clear, in this carbon constrained world, as we're moving forward, we have these great projects, and I'll talk about those, and they're very advanced. But what are we trying to do? We're trying to bulletproof these projects in this environment so we stay at the bottom end of the global cost curve for our projects. How do we do that? Well, with the special economic zone, you have fiscal incentives provided by the PNG government. They're very aware that they have to compete with other special economic zones in Asia who have similar industries who also give fiscal and tax benefits to those companies. So that's the first thing. By us achieving that, we've got that added benefit for our projects, which make financing it, our debt cover ratios, and all the things that investors want to see more attractive. The second thing is that there is an overflow, and what I mean by that is the area secured has given us the opportunity also to look at other industry. We're still going to be looking, number one focus, for instance, where the special economic zone is at the cement and lime, but while we're up there, securing the special economic zone has given rise to the ability, as an example, to then look at a large-scale solar farm. Why would we look at that? Because from a financing point of view, from a customer point of view, they ask us, show us your pathway for decarbonisation. We're going to buy product off you, and you can see in the quarterly we have customers lined up for our quicklime kilns, but they want to know what we're doing about carbon and offsetting a carbon abatement, carbon technologies, renewable energy as a mix. So we've got that ability now in that special economic zone to take the renewable energy, use it for what we need, but also then there's a surplus. So whilst there's a surplus area in the special economic zone, there's also a surplus of renewable energy that we're able to provide at a very competitive price, because it's within that zone that also attracts the same fiscal incentives. The market has not put 2 and 2 together on that, and I can assure you that, because when they do and they start to run the numbers, they'll understand the true inherent value. We're one of the first in the country to get this. The Act was only passed in 2019, and from that perspective, of the Special Economic Zone Act, from that perspective, we are looking to ensure our master planning and involvement of industry and international global corporates is going to be at the forefront. However, that will not detract from what our pinpoint focus is to get our projects into cash flow. So the other element of that is carbon offsetting. Carbon offsetting also, we will require a certain amount of carbon offsets while technology evolves to offset our products, so we can be a net zero producer of lime and cement products for our flagship. Why do we want to do that? Well, let's compare the market to us. What has the Australian producer said they're going to do? By 2030, 2050, they're going to achieve these net zero aspirations. We have the ability with our solar, with our abatement and carbon offsetting, to actually be net zero from the beginning of production. We will then be a supplier of choice into the Australian Pacific markets, and those markets from an ESG point of view, those boards, if we're able to say we're providing the same product with a carbon neutral or net zero stapled credit, who are they going to buy from? So I'm not going to go into it in too much more detail, except to say hopefully I've shown you that these initiatives are going to complement our existing business, but there is overflow. With the carbon areas that we've secured and securing, there is more than what we need for our businesses, so there's an opportunity for carbon trading. So in doing that and looking at that, I guess it's a very simple and quite a crude analogy, but if there's a golden goose that comes and you've got 1 egg, and it's able to lay 4 eggs, and it wants to do that, and the process is there and it's in front of you and willing to do that, you're going to take those extra 3 eggs. For us, we've got an overflow of renewable energy. We have an overflow of space for the Special Economic Zone, and we have an overflow of carbon offsets. We are going to take those and we are going to monetize those for the shareholders of Mayur Resources. So I think that's just at a high level going down on our recent announcements and initiatives, and you can expect more news flow coming as that continues to roll out. The key here is, COVID is everywhere. Management were able to get into country for a number of months, achieve a lot of progress on the ground, and I'll start with cement and lime project. As you may or may not be aware, the cement and lime project is located right next to the $18 billion PNG LNG facility. It's 24 kilometres from the capital city. It will service Papua New Guinea's demand for quicklime through one of its kilns. The second kiln will go to Australia. Both of those kilns have already got letters of support that we're able to show financiers and bankers. Our kilns, those 2 kilns are full. That's a very good news story for us. The reality is the demand for quicklime is growing, and what people may or may not understand, we've got 140 million tonnes of ultra high grade quicklime right on the coast next to our own wharf that's deep draft. And when you're looking at that, when you're looking at labour, energy, resources and market and supply chain, we have those quite nicely tied all together. It is a very unique site. I've been to Thailand, I've been to Malaysia. They don't have the sites that we've got. They've got the same grade ore, same type of product, but they do not have the unique location or the supply chain that we have. So I think that's primarily a big benefit. The second thing to take note of with quicklime, lithium, cobalt, rare earths, the copper gold sector, all of those sectors that will continue to grow, in particular with a green-facing metals focus and approach. From that point of view, people don't understand the input commodity for all of those products to expand is quicklime. Why are we seeing the penetration of Thailand into West Coast Australia? Because it's a high-grade product. They're looking for value in use, and they can see the demand's building. From our point of view, we've got kilns secured with current demand. But when you look to the future, we're not banked on that, but we have a resource big enough to service that. We've got our own wharf, don't have to worry about port utilisation and securing enough area. We've got that ability with that wharf site to actually export not only the existing material, but future. So for quicklime, we're very excited about it. And we're very excited about the, as he said, the renewable energy and the carbon offsets that are all going to support the development of that business. We're also very excited about the level of interest in the project, be it customers and strategic partners down at those asset co levels. The way we then see the business evolving, and bearing in mind, people say, well, you've been listed for 4 years, these things are happening, but let's just pause for a moment and remember what oil search used to be as a business. They're a very, very small business for a long time. Now they're doing a $22 billion merger with Santos. Where did they set up? 100% in PNG. Persistence, patience, and perseverance has rewarded those that do the right thing in PNG, work with the government, work with the landowners, work with the local communities. When we're not going to be any different to that, and we're aspiring to lead the nation with nation-building products for themselves, but also create an export industry. So that's quicklime. Then we have cement. Cement, on the other hand, what people do, and some do, some don't understand, 50% or thereabouts of Australia's cementitious needs are imported out of Indonesia, Japan, China, and other Southeast Asian countries like Vietnam.